Are you tired of running on the career hamster wheel? Feeling like you're working hard but not getting any closer to real freedom? What if I told you there's a destination called financial independence, where your investments do the heavy lifting, earning you a cool $2,900 every single month? Today, we're not just dreaming about it. We're drawing you the exact roadmap to get there. This isn't just theory. It's a practical, executable plan. The biggest question most people have is, how much do I actually need to start? Well, let's fire up the GPS and begin our journey. Our first stop is Station 1, the speed lane. I call this strategy the dual income funds. Think of this as the race car of investing. It's designed to get you to your goal in the shortest time possible. How does it do that? It uses two powerful engines working together. The first engine is owning a portfolio of solid stocks. The second engine is a bit more advanced. It involves selling something called covered call options on those same stocks. This dual-engine approach pumps out some of the highest possible returns you can find, often breaking the 11% yield barrier. That means you get paid from the stock's performance and from selling those options. Now, for the big question, what's the ticket price for this express train? To generate that $2,900 a month using this high-speed strategy, ULL need a starting capital of somewhere between $280,000 and $310,000. That might sound like a lot, but it's the lowest amount among our three strategies today because the yield is so high. However, every race car driver knows there's a speed warning. High speed comes with higher risk. The market can be a bumpy road, and this strategy is more volatile. You need to be prepared for some ups and downs along the way. But if you have a higher risk tolerance and want to reach your goal faster, the dual income funds might be your perfect vehicle. All right, let's pull into our next stop. Station 2, the balanced lane. I call this one the partnered property owner. Have you ever dreamed of owning a piece of the biggest shopping malls, towering office buildings, or sprawling apartment complexes across the country? Well, with this strategy, you can. We're talking about high-yield real estate investment trusts, or REITs. When you invest in a REIT, you're essentially becoming a partner, a part owner in a massive portfolio of properties. You get to enjoy the cash flow from all the rent collected, but without any of the headaches of being a landlord, no calls about leaky faucets, or chasing down tenants for payment. So what's the ticket price to become a partnered property owner? To hit our target of $2,900 a month, you'll need approximately $320,000 invested in high-yield REITs. Now here's what makes this strategy so compelling. There's a golden rule for REITs. By law, they are required to distribute at least 90% of their taxable income to shareholders like you in the form of dividends. This legal requirement ensures a strong, steady, and continuous stream of cash flow directly into your pocket. It's a fantastic way to blend growth potential with reliable income, offering a balanced approach between speed and safety on your road to financial independence. Now we arrive at our final destination on this roadmap, Station 3, the security lane. This is for those who value peace of mind above all else. I call this strategy the perpetual dividend kings. Imagine investing your money with companies that are so stable, so dominant in their industries, that they have not only paid but increased their dividends every single year for at least a quarter century. We're talking about the titans of the business world, the blue-chip companies whose names you know and whose products you probably use every day. These are the rocks that can weather almost any economic storm. So why is this the slowest lane? Because safety and reliability are the top priorities. The yields here are generally lower, hovering around 7%. Because of this lower yield, the ticket price is the highest of our three options. To reach that monthly target of $2,900, you'll need about $500,000. But what you're buying with that capital isn't just income. It's stability, it's longevity, and it's the ability to sleep soundly at night, knowing your investments are with some of the most dependable companies on the planet. Plus, over the long term, the value of your assets is likely to see continuous, steady growth. This is the fortress strategy for the cautious investor. So there you have it, the complete roadmap to a $2,900 monthly income from your investments. You've seen all three stations. First, we had the speed lane, the dual income funds, requiring around $280,000 for the fastest, but most volatile ride. Then, we visited the balanced lane, becoming a partnered property owner with REITs for about $320,000. And finally, we explored the security lane with the perpetual dividend kings needing $500,000 for maximum stability. The journey is mapped out, but the decision is yours. Where will you pack your investment bags? Which strategy best fits your personality and your financial goals? Share with us in the comments below. Which station will you launch your retirement journey from? We'd love to hear your thoughts. And if you found this roadmap helpful, please give this video a like and subscribe for more financial guides to help you on your journey. Thanks for watching.